Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, June 2nd, 2025. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, are markets too sanguine regarding the strategic decoupling of the US and China? Our answer: the recent mildly risk-off tone continues today as China and the U.S. accuse each other of breaching a weeks-old trade deal, reigniting tariff tensions over the weekend. While Trump declined to provide specifics on Friday, U.S. Trade Representative Jamieson Greer subsequently flagged China's failure to expedite critical mineral exports for high-tech electronics. China's Ministry of Commerce slammed Trump's claims as false and said his push for a call with Xi this week was in jeopardy. Beijing also blasted new U.S. curbs on AI chip exports, chip design software, and Chinese student visas, saying the U.S. broke the January 17th Trump-Xi consensus and vowed resolute and forceful measures if the U.S. violations persist. Treasury Secretary Scott Bessent said the trade spat will be ironed out in an imminent Trump-Xi call. Recall that Trump signaled a desire to speak with Xi as early as February and said he's opening to traveling to China for talks. We view Trump's willingness to play ball as supportive of our April 23rd pivot from bearish paradigm B to bullish paradigm C. Elsewhere, Treasury Secretary Scott Bessent provided incremental confirmation of our paradigm C thesis yesterday by signaling, quote, we are going to bring the deficit down slowly, over the next 4 years. And that was, I want to say it was on Face the Nation or Meet the Press on Sunday. Slowly is not quickly. Moreover, slowly is supportive of our view that the Trump administration aims to delever the U.S. public sector balance sheet via reflating economic growth as opposed to legitimate fiscal austerity. Long live Paradigm C. Transition to our 42 Macro dashboard. As always, to wrap up with a question from our community. This one's titled The Immortal Top Part of the K. Hello, Darius. Hope you and your family had a great weekend. We did. Likewise, my friend. Says on Around the Horn, you said that as long as the top part of the K stays intact, the U.S. economy is likely to stay resilient. If so, is there anything really left that could breach its armor? The top part of the K owns the AI and robots, gradually removing the need for human labor and further reducing the bargaining power of the working class. The top part also has the financial know-how and access to it to protect itself from market downturns and actually benefit from them. Wars, no problem. Someone else needs foots the bill. Famine, not for us. Civil unrest, meet my automated swarm of armed drones. It has built itself into a fortress of capability, foresight, political power, technology, and money. Does this mean we are now forever resilient? No, not necessarily. No. So I agree with most of what was communicated in terms of how resilient the top part of the K has made itself for a variety of the reasons laid out in the question. I don't think we're perpetually resilient, however. The economy would become very unresilient if you take away the one thing that the top part of the K cares about most, and it's their asset prices. Ask the top part of the K, at least here in the U.S., which I would imagine is probably just as bad, if not, I would imagine the rest of the world is just as bad as us, if not worse, just based on, the structure of their economies. But the top quintile of asset owners in the United States of America by household own 90% of financial assets. So, I mean, again, that is the K-shaped U.S. economy in a nutshell, specifically as it relates to investor exposure to financial markets. And so, if we had a significant and sustained bear market, that would eventually cause the top part of the K, to pull back enough on their consumer spending and their investment activity in order to allow the U.S. economy to go into recession. So that would require, again, a durable bear market. That ultimately causes growth to slow faster and ultimately you wind up in recession. Now, again, unless you can based on how the economy is shaped from a sectoral standpoint, from a distributional standpoint, it's very unlikely that you wind up in an actual recession for those reasons and other reasons until you had, at the bare minimum, a preceding durable bear market that eventually causes them to pull back on consumption and investment. So I generally agree with the sentiment of the question that the K is incredibly resilient for all the reasons we've been pounding the table on for. The top part of the K, rather, is incredibly resilient for all the reasons we've been pounding the table on since we authored the resilient U.S. economy theme back in the summer of 2022. No change to that view. I think we've been right in rejecting Wall Street's, going back to early April, every sell side bank in the world was talking about recession again, and we were like, absolutely not. We're not going into recession. Just be aware that, hey, growth is probably going to slow. We're in this U-shaped economy, but ultimately the other side of the U is a recovery. And I think investors need to be aware that the markets are very clearly positioning for that recovery because they see the growth slowdown as being transitory. Now, if the growth slowdown was indefinite, because there was not a series of credible policies being tacked onto tariffs that could potentially reflate U.S. growth, then that would be a much bigger issue for asset markets. But clearly, it's not. The transitory slowdown in growth is not an issue for asset markets because you have a litany of other pro-growth, shocks from a policy standpoint that are currently being legislated and or coming down the pike with respect to deregulation, et cetera. So we'll wrap it up there. Darius Dell here presenting our Macro Minute for Monday, June 2nd, 2025. Best of luck out there today. We'll catch you back here. Have a great week.